Well, let's get all the latest business news today from Simon Jack.
Yes, good afternoon. One of the biggest corporate frauds in UK history took a new twist today with the arrest in Spain across several cities of 6 people thought to be involved in the Langbar fraud. Now, this is a fraud that took place between 2003 and 2005 and involved the company coming to the AIM exchange here at the London Stock Exchange and masqueraded itself as having hundreds of millions of pounds in assets, which eventually turned out not to exist. These people have been arrested in conjunction with that fraud. Now, somebody who represents shareholders who've lost over £85 million in that fraud is Nigel Smith from the Langbar Action Group. Nigel, first of all, your reaction to today's arrest. Of course, no one's been convicted of anything yet. Are you any closer to getting back any of your money, and how much have you lost?
Well, we're very pleasantly surprised at today's announcement. It means that we are moving forward. And we are closer to getting some money back because, thanks to the sterling work by David Buckler, the present chairman of the company, he's managed to recover over £30 million worth of money so far. And we're hoping that he will complete a recovery of the company in the future. Now,
it's labyrinthine in its complexity. I understand this company was registered in Bermuda, founded by a Polish-Canadian. It banked in Brazil, traded in Argentina. Do you think you'll ever get your money back?
It's a truly international flavour to this company. Yes, I think we will get a substantial portion of the money back for the shareholders, and thankfully this is mainly due to the regulations that came in after 9/11, whereby banks can track money as it's being passed from one bank account to another.
Now, what happens next in your eyes?
Well, it's for the chairman of the company to start negotiating with the various advisors to the company. This company listed on the AIM, it should have been checked. The Nomad, the nominated advisor, was fined $250,000 by the stock exchange for failing to carry out their duties.
How much of this is caveat emptor? We saw, for example, today Santander said it was going to compensate some of its private clients who really didn't have any business of knowing better for the money they lost in the Madoff £50 billion fraud. How much should your investors have said, well, I should have checked this out a little bit better myself?
Well, they did check it, actually. And unfortunately, you see, they weren't the only victims. Some very well-known high street investors, institutionals, invested in this company as well. They did their sums, they did their figures, and they invested based on the facts that were presented before them. The chief executive of the company checked that the money was there in Brazil, but unfortunately he was duped as well. So really they did do their homework. They relied upon the regulated news service releases of the London Stock Exchange, and unfortunately the stories they were told were lies.
All right, Nigel, thank you very much indeed. We've had a statement from the Serious Fraud Office, which has just come in. They said 6 people were arrested and interviewed as part of the ongoing investigation into certain individuals previously associated with the Crown Corporation, now Langbar International. So more on that as we get it. A quick look at the markets today. Despite all those gloomy job loss numbers, the market's actually up 2.3%. Back to you.
To the UK, and Rachel has joined us with the business news. Hello.
I have, John, and we're starting today with news of that multi-million-pound fraud because Spanish police have arrested 6 people on suspicion of perpetrating a £420 million fraud. The fraud was committed over a 2-year period at an AIM-listed company called Langbar. The Serious Fraud Office began an investigation into Langbar in 2005. Nigel Smith from the Langbar Shareholder Support Group insists that shareholders did all their sums when they invested in the firm.
Well, they did check it, actually, and unfortunately, you see, they weren't the only victims. Some very well-known high street investors, institutionals, invested in this company as well. They did their sums, they did their figures, and they invested based on the facts that were presented before them. The chief executive of the company checked that the money was there in Brazil, but unfortunately he was duped as well. So really they did do their homework. They relied upon the regulated news service releases of the London Stock Exchange, and unfortunately the stories they were told were lies.
More gloomy predictions for the economy, with a leading think tank warning that the government will be left with a long-lasting debt burden. The Institute for Fiscal Studies predicts the downturn will cost the Treasury more than £50 billion a year in lost tax revenue and higher social security spending. IFS Director Robert Choate says it could take 20 years for public debt to shrink below pre-credit crunch levels.
Well, I think the key message that emerges from our analysis is that even if the Treasury is right in the forecast that they put out back in the pre-budget report last November, it could well be not until the early 2030s that debt actually returns below its pre-crisis levels. So that implies that the fiscal tightening, the combination of increases in taxes and cuts in public spending that the Treasury is planning to put in place over the next few years, adding up to something like £38 billion a year by 2015-16, will have to stay in place for a lot longer than that before debt gets back down below pre-crisis levels.
It's been a mixed day on the jobs market. Car component maker GKN said it had shed 242 jobs in the UK. Thames Water are getting rid of 300 positions, and Shop Direct are making 1,000 redundancies in its call centres. However, on the upside, supermarket giant Asda is bucking the